Morning and welcome to everybody. I see we have quite a full house, and that is super exciting to welcome each and every one of you to today's session. This is session 5 of the auditing sessions. So I hope that the majority of you have joined us for most of these sessions. If not, you are still most welcome, and we are very glad to welcome you here. If you do find that there's something that's maybe not clear, you are most welcome to ask a question in that, especially where I might be assuming that you already know something from the previous sessions, or where I might be referring to the previous session where we dealt with expenses. But in any event, the recordings are available, so if you have missed something, you can always catch up. And yeah, we are looking forward to today's session. I see there's still 1 or 2 people joining, and that's perfectly fine. We will get ahead with the introduction and go on with those while the last ones are still joining us. Right, so I see someone is saying that they don't have any sound. Thank you for notifying us of that. I just want to double check. Can you maybe just, I think the easiest is probably if you are able to raise your hand. There's a little button to raise your hand. If you can just raise your hand so that I can see if you, majority of people can hear me. There's a lot of hands going up. So thank you very much. That's clearly then just a problem in 1 or 2 unique cases. Thank you. I'm going to lower those hands. Appreciate it. What I do try to do is I have my eye on the one screen that shows as the screens are changing over on your side. So I might talk a little bit slower, or maybe just have a few seconds of silence when I do make big changes on the screen. Sometimes I forget, but in the majority of cases, I try not to move or not to talk too much while I have big changes on the screen. Because, of course, if you have a bit of a slower internet connection, it's quite possible that you won't be able to have both of those changes at once. And then I try to almost want to say, first let the video go, and then I'll talk, because I've learned from experience also that the video for some reason is always prioritized. All right, so I hope that 1 or 2 people that did have a bit of a problem with the sound are now sorted out and can also hear us. Good, so let's jump in and start talking about today's session. I just want to make double sure that we are recording today's session. I wonder, Masilu, will you just double check for us? I've got Masilu monitoring the questions for us. Just double check that it is recording. For some reason, I can't see now that it is being recorded. So I just really hope it is being recorded. All right, good. So the overview for today, who is our client? We're going to quickly just remind ourselves as to who is our client, and then we're going to jump straight into auditing employee costs. Well, of course, before we say who's our client, I must maybe just also introduce myself. I'm Joanna Schreder, and I do consulting work for Caseware Africa. Training is an absolute passion of mine, and very, very closely with that is the probe audit methodology. I have trained many delegates on the probe audit methodology, and so it really is a pleasure for me today to help you to also work through the employee section, and of course with that also on the probe methodology. All right, so let's have a look then at our introduction. I just want to see, Masilu is saying something here for me. Oh, thank you. He says it is being recorded. Thank you, Masilu. Sometimes I get nervous unnecessarily, but rather check now than later on. Good. Just some housekeeping things before we get started. Everybody's microphones have been muted. However, if there is an urgent question and it's easier for you to ask it via the microphone, then you can always actually just have you unmuted, and we can ask those questions, especially seeing we want to really make this an interactive session. So please feel free if that needs to be done. Everybody's cameras is turned off. I'll turn off my camera as soon as we get stuck into the work. And then this webinar, if you do need CPD, it is eligible for CPD. You must stay for the duration, and of course also respond to the quizzes where we will have them. If your signal is lost, please just come on again, just go back to your link, log in again, and then you should be able to just continue where you might have lost with us. And as we have confirmed, the recording is being done, so you will always be able to have access to that recording. And the guys are quite good at that. I almost want to say within a week, they make that recording available. So if maybe you miss a part of it, or if you want your colleagues to also join and watch this webinar today, you know, they should be able to get it within a week and also join in the learning. Right, then just some admin. Some of you have already been able to ask questions, so that's fantastic. But what we found in previous sessions is people don't always understand or know where to go look for the question or chat panel. So this is just a little screenshot that I've made from a delegate point of view. I've got a very big dashboard with lots of things that I need to look at and monitor. So this is what you will see. You will not see exactly the same message that I made in that screenshot, but I did see that we have, where is that part now? I can also now not see the chat part. Where we have made available some links for the material. And well, right at the start, I also said welcome to today's webinar. So there is a chat and question panel. That's also the place where you will ask questions to us if you do have any questions. All right. So that is just where you will also later on, we will put a course evaluation, things like that. So you will see all of those ones there. Good. I want us to start with a first poll, and that's also related to the materials. I want you to just double check, do you have today's material? And the options are pretty much no, yes or not yet. So please just indicate to me. I want us to take this moment just to make sure that if you've got the material, you've got it, great. If not, and there's quite a number of you that don't have it yet, please go onto the chat panel that we looked at just now. Have a look there. There are 2 instances, 2 recordings where we've given you the link to go and download it. I'll quickly show you what it looks like. When you follow that link, you get to this page, which is part of the Success community. And you just simply go down to session 5 and session 5, probe employee cost. Oh, well, we are quickly still getting the poll. Sorry, I'm going to see you just now. Suraj, I see you are struggling for the material link. We will give that to you just now. We will send you that link. Anybody that's still looking for a link, just ask through the questions chat and we will share that with you. I'm going to close the poll because I think most of us, those that have the material have it. Those that don't have the material, well, you're going to download it now. So once I've followed that link that's been given in the chat panel, this is the page that you will go to. That's exactly the success.caseware page. And then you will see those 3 lines of blue with hyperlinks, more or less in the middle of my screen, just slightly below that. Now, those 3 lines are firstly today's session, probe employee costs. So you can simply click on that and download the material. The other one is for Audit International, and the rest is for all the previous sessions materials. So please just follow the link that you either get on the chat panel or that Marcelo is providing you through a question, and then you can easily go and download the material. It's all in one zip folder. You'll just have to unzip that folder, and then you will have in there, let me also just show you that. So in that folder, you will have a folder that's called supporting documents. Those are the documents that the client's going to give us. You will have the Caseware file for today's session. So in there, you can just open it and you'll have the Caseware file to work in. And then also I've given you a PDF copy of our slides for today. That is purely because I've got quite a bit of notes on the slides, and I want you to rather sit back and focus, take in what we're talking about, rather than trying to just write down all the material. So you've got a copy of the slides in PDF. You've got exactly the material that I'm going to work off, the Caseware file, blank working papers that we're going to complete together, and the client's documentation that we will also use. All right, so please, once you've downloaded it from that link on the website, when you click that blue block, you will get a zipped folder. And once you unzip or uncompress that folder, these are the documents or the folders then at least that you will see. All right, Good, so that's that then for now, and then I'm going to, while you guys are downloading, I see lots of people are still getting the links. They were also in an email that was sent yesterday or the day before, I can't remember. So if you want to go look at your confirmation, you can do that as well. But otherwise, it's much easier to just quickly get it here on the webinar. All right, also bear in mind that while you are doing this, your sound might also be a bit distorted because you are now downloading quite a big file. That's going to take quite a bit of time. So if you don't hear me now for the next few minutes while you are downloading that, please don't worry, it will be better. Once you've downloaded the file and you're not using up as much internet access anymore, bandwidth, then the sound will restore. All right, so I'm going to start by actually now hiding myself, switching off my camera. I think all of you know what I look like, so that's great. So that's that. And then I can now look at our other screen, knowing that you don't think I'm not looking at you. All right, so we've done the poll. The majority of you are downloading the material or have done that already. That's perfectly fine. If you're still struggling, please just put a question in the chat question panel. Marcelia will help you with that. Right, so as we've been doing the last few weeks already, or few sessions, we are still working with our client called Wrap Up Manufacturing. They manufacture basically food wrapping or food food covers. So if you think about when you go and buy a smoothie, that little cup with a dome-like cover, if you buy a sandwich in this little triangular type thing, those kind of packaging material to wrap the food that you get at takeaway or fast food in businesses. Right, so that's what they're manufacturing. You can imagine they then have raw material. They've probably got stuff that is in progress, in the manufacturing progress. They've got finished goods. Their clients are potentially wholesalers, not really retailers. Yeah, so that's about the client. Then the financial year end that we are auditing is the 30th of April, not just now the other day. Well, we're still busy with 2024. We're not even done with that one yet. So we're obviously auditing last year, the 2023 April year end, using IFRS for SME is what the client is using for their accounting framework or financial reporting framework, preparing financial statements in terms of IFRS for SME. And the accountant with whom we have so much interaction is called Andy Crack. Okay, I just quickly want to also check the questions again. Sorry, I keep going to the questions, but I see one or two people that that are having a problem logging in. I see, okay, that's great. So people are just asking about logging onto the webinar. That's fine. All right, so I thought the question was perhaps about the Caseware file, if someone is opening up the Caseware file. So the Caseware file, you can just log in. You probably already have a login for those files from the previous sessions. So just log in as you had in the past. All right, otherwise it looks like everybody is sorted. Good. So you might have seen the slide before where we talk about the process flow. So the process whereby information gets into the financial statements, and we are going to refer to that quite often today to say, how are we actually auditing, or where are we in this process when we are auditing? Right, so the client is preparing financial statements in a perfect world, which is not where we live, but in a perfect world, the client would give us basically like draft financial statements, and we would be able to audit from that. Of course, that's not always the case that when we get to a client. Very often the client gives us a trial balance, which they will use to draft the financials while we're auditing. And of course, we're hoping that that is the final trial balance, right? But there is also other documentation, other information. For example, there might be other schedules, like let's say related parties, who the parties are, what their relationships are, those kind of things. That is not necessarily contained within the trial balance, but that is also used to draft the financial statements. All right. So from the financial statements, we have the trial balance. From the trial balance, what did the client use to prepare the trial balance? Well, they used the general ledger and all the entries in there. Now, if we think about employee cost, of course, they needed to use their payroll system in order to record the entries in the general ledger. Now, many clients will have special software. There's a lot of ERP or payroll type of software that you can use. Some clients might even use Excel to record their payroll records and then just make monthly entries of the relevant items. You can imagine you can't process every employee's salary and deductions and so forth individually in the general ledger, and that's why you have the payroll system or maybe Excel, something like that. Of course, payroll systems are lovely because they can automatically help you with calculation of the taxes and so forth. We're going to have a lot of discussions about that later on today, so I don't want to get ahead about everything that's included in the payroll system just yet. All right, what is used to process items in the payroll system? Well, the employee record. So for example, when I'm appointing an employee, then I have a contract for that person. When they are working, I might have timesheets. I'm sure many of you have timesheets, but you probably earn a fixed salary. Whereas if it's a wages person, then they actually complete timesheets according to the shifts that they are working. So those records are actually providing us with information of which shifts they work, how many hours, how many of those were normal, overtime, etc. We're going to have a look at that later on as well. So all of that information are examples of employee records that are used to process transactions in the payroll system. And then, of course, before we have those, well, there's some action that needs to happen, and some of those would be we're hiring an employee, or we schedule the manufacturing process and we see that we're going to need some overtime shifts, and therefore we will have some records that go with that. Okay, there's lots of examples that could go with that, maybe even one of the employees wants to take some leave, they want to go on holiday, and so that's the action. The records is the leave pay application, and that goes into the payroll system, etc., etc. Okay, so all of those things, there's an action that has some documentation that is processed, in this case in the payroll system, that is recorded in the GL, the trial balance, and eventually lands up in the financial statements. When we are therefore auditing the employee costs that is recorded in the financial statements, we will have to actually flow through or work backwards through all of this documentation to make sure that the amounts and the disclosures in the financial statements are in fact correct. And in correct, we refer back to the assertions. We've got completeness, occurrence, accuracy, and all of those assertions. All right, good. So next then. Next, then, we have the financial reporting framework. And so we mentioned that the client uses IFRS for SME. Now, what I want us to just bear in mind in the back of our minds is that when the client prepares their financial statements, they do it in terms of IFRS for SME. In the planning of our file, and in the previous sessions, we also mentioned this, in the planning of our files, we confirmed that the client is appropriately using the framework IFRS for SMEs. What we have then done and need to do for each of our sections is to ask ourselves whether the accounting policies that they have for recording individual transactions, sorry, not individual, specific classes of transactions, account balances, and so forth, if those policies meet the requirements of IFRS for SME. All right, so in other words, the client prepares financial statements and they say they do it using IFRS for SME. Then we go and we see, is the accounting policy for operating expenses, for inventory, etc., meeting the requirements of IFRS for SME, the chapter 2 or 11 or whatever it is that we are looking at. And then when we go and do the field work, there we ask ourselves, is the accounting records reflecting that the client has correctly applied the accounting policies that we had said we are happy the client is doing that in line with IFRS for SME. So in terms of documentation, just in case you are curious, We've already selected the accounting framework in 1020. That's one of our first planning documents. We then considered the principles for preparing the financial statements and the accounting policies that we indicated in 1051. We're going to look at that just now as well. And so when we are auditing these transactions and disclosures, we might need to make sure that they are in fact done in accordance with the framework. Now, the fantastic thing about Pro is that the procedures are already helping us to make sure that they are done within the SME framework, and that's why it's not necessarily all that critical right now to you, but one day when you start creating your own audit files, always make sure that you use the correct template, because if the client uses IFRS for SME, you want to use the SME template so that you know that the probe steps, the work program steps that appear in the work programs are in fact referring to IFRS for SME. All right, that just makes your life a lot easier. Good, so we are then ready to get started in our Caseware file. And by now, I trust that the majority of you have now already downloaded your material. I haven't really seen any new requests coming in, so that should all be there. If you really are still struggling, please do send a message. Of course, I'll try and go as slowly as possible, and hopefully it all makes sense if you just want to follow on the screen. But I would be most happy for you, and I think it would also be valuable for you if you continue from the on your own file as well. All right, so we're going to go to the Caseware file. Good. So in our Caseware file, right at the top, we see Wrap Up Manufacturing, 30 April 2023. You'll see that the name of this file is still OPEX, or operating expenses. Remember that the employee costs is part of OPEX in the income statement when it is reflected. It's just we test employee costs separately or differently to other operating expenses because it is so, I almost want to say special, or rather let's say because it is recorded in such a special way, or the transactions originate in such a special way. All right, so we'll start off then by having a look in the pre-engagement planning section, where we will go and just see what transactions have been recorded, or how has it been recorded in the pre-engagement planning. That is our types and volumes of transactions 1051. All right, so remember that if you're not sure how to find this item, oh goodness gracious me, there I've jumped into a different thing. If you're not sure where to find this, you can always just go Control F. In Control F, let me just move this across, you can then say, well, I want to go to 1051. It will then jump to 1051, and if you're already beyond that, you might get a message, let me show you, that says this item was not found, don't panic. It does then say, do you wish to continue searching from the beginning? You say yes, go to the top and find it again. So it basically goes down to the bottom and then goes up again and starts searching from the top. Right. So don't panic when you see it's not there. It is there. Just continue searching. All right. Then open up 1051 for me. Mine is already open. Oh, I see it was open on another. Oh, it's taking a moment. All right, let's give it a moment. Okay, right. So how do I know I'm on the right screen? Well, I can see that by looking at the top left of the on the what do we call that? On the freeze, right? So let me show you this black line at the top. That on the left-hand side, that's where the freeze is, and it now tells me very clearly I'm in 1051. Now I know I'm in the right place. Good. So then what we want to come and have a look at here is we want to see that the employee cost has been correctly considered in terms of what's happening in this client's account and what do we need to look out for when we are going to audit the section. Remember that planning's been done by the senior, so we just want to familiarize ourselves and double check that we are also understanding the client in the same manner. So the document opens up right at the top for us. So we're going to go and basically scroll down to operating expenses. On the left-hand side, you've got the document map activated, which really is the easiest way to find it. You go and locate operating expenses and you click on that. Good. I'll then see stuff that's probably familiar to the majority of you when you attended the previous session. I know it's been a while with all these long weekends in between. With the previous session, we discussed and audited operating expenses. So in today's session, we are still working in operating expenses, but only the specific element. So a lot of our analytical review stuff will not necessarily be new to us and also specifically not relevant. We are looking for the indirect employee cost section. There is a note to say there's no unusual change noted, right? And also if we scroll lower, the types of procedures performed, that's all been documented, nothing to worry about there. In terms of procedures performed in identifying possible risks of material misstatement, all good there. And also just to maybe highlight to you question 5 that says evaluate if the entity's accounting policies are appropriate and consistent with IFRS for SME. So that was where we went to if saying the client uses IFRS for SME, are their policies complying with IFRS for SME? That's where you say yes, happiness. That is in fact the case. Then we go to the transactions and balances section, still for operating expenses. And we have a look there. So some of the elements that are relevant here for us and is then specifically around employee costs. Now, what I want to remind you, when you click any of these blocks on the left-hand side, they will specifically open up or activate specific procedures and not sections really, but procedures in your work program. So you might or might not have heard of TRABs, transactions related to account balances. So employee costs is also a specific section within operating expenses, and that then has specific procedures separate from the operating expenses section and is then referred to transactions related to the account balance or TRAB then. Okay, even though it's operating expenses, which is probably a rather a class of transaction, but it is a separate section. So for employee costs, we now need to tell Probe Audit what do we have for wrap-up manufacturing, because not every client is the same, not every client's employee system or employee cost section is the same. So for employee costs, the senior is already documented to say employee costs are split between cost of sales and expenses, but we will test it together due to all of the salaries and wages going through the same payroll system. So how do we know that? Well, we would have seen employee costs earlier up. We would have seen the indirect employee costs or indirect employees or salaries. And then on the cost of sales lead, we will have a look at that soon as well. There are also employee costs. We would go and ask the client to say, why are they both indirect costs or cost of sales, why are they under the operating expenses, the indirect employees, and why under the manufacturing? That might come across as a bit of a silly question, but what you're trying to determine also is how do they split that? How can you know who goes where? Of course, the title of the staff will also give you an indication, but of course, because they're manufacturing, I'm sure you're going to agree that everybody that works in the factory and addresses or works on the machine operation and the manufacturing of items, they will be under cost of sales. All right. In our case, the client has also told us that all wage earning employees work in the factory, in the manufacturing department. So all wages are in the cost of sales section, lead schedule. And we then, obviously from that, then all the salaries are the admin staff. So admin staff earn salaries, manufacturing staff earn wages. So on the lead schedules for operating expenses, we expect salaries. For cost of sales, we expect wages. All right, then the next block that's already ticked is to say that the company does pay short-term paid absences, such as annual leave. All right, so that then also gives us specific procedures in the work program for leave pay and the provision and the expense. So that's why that's ticked. The client doesn't have any specific profit sharing or then bonus plans. Now, they do pay bonuses in the case of basically referred to as 13th checks. So they are entitled to them based on contracts, but not based on, what is the word now? I was using the word yesterday in a different context. Not based on performance. So not performance bonuses, not because we made a lot of profit, you are getting a bonus as well. That would have been a separate set of testing. So that's why that line is blue. They do pay remuneration to directors, and we will see later on that there are very specific procedures that we need to check specifically for disclosure in the financial statements in a South African context. And so with that, then there's the disclosure of the directors. So that's also selected. There aren't any accounting estimates in this case. And the reason is really just because the only thing that we've got that comes close to that is the annual leave provision, but that's not really a provision or rather not an accounting estimates. It is more an accrual, because the only thing that we are not sure of is when this person is going to take the leave. So when are we going to have to pay that leave to the person? We are not so worried or unsure as to exactly when what the amount is or the number of days that is outstanding, because those are definite. You will probably also know from your own employment contract, when you have, for every month that you work, you earn probably 1.25 days, because you've got 15 days in a year that accrue to you. So it's really not that difficult to know that every month a person accrues 1.25 days. Have you taken leave days? Yes. How many days on the forms, approved, etc. So it's all factual. The only thing that's unsure is, when is this employee going to take the leave, or will the amount actually be paid out? And if it's going to be paid out, when is that payment going to happen? Maybe when the person resigns one day. All right. So that's why we won't be ticking accounting estimates, and there is nothing else to tick in general in this case. All right. That is then 1051. So the next thing that we can go and have a look at is then the planning documents. Back to our document manager. You can either scroll down to the audit plan, or you can just look for the audit plan. There's 1220 audit strategy. Um, 1220 audit plan and strategy. And I've already opened mine up, so I'm just going to find it for us quickly. Right, so 1220 is the audit plan and strategy. And what I want us to have a look here is just to see what the results of the planning are. Again, in my document map, apologies, my throat seems to be acting up. In the document map, operating expenses, that's where we've got the information. All right, so again, employee costs is part of operating expenses. The risks assessed here is no risk for completeness, but we have an assessed risk of medium for occurrence, medium for accuracy, valuation, and allocation. There's no cut-off risk for employees specifically. We'll see on the work program where the risks for employee costs are. And if I remember correctly, there's also no risk for the normal employee cost for presentation disclosure. There might be one for the director's remuneration. All right, so just having a quick look here, we can see our specific materiality is still 800. We have not opted to use any experts, no confirmations, external confirmations used, any of those. We do not specifically select to do any unpredictability or tend the wage out, any of those things. We're just going to do, when I say, a normal plain vanilla audit here. All right. What I would want for us to go and do is maybe to go and have a look at the lead schedules. All right, we're going to look at the work program just now, but let's just quickly have a look at the lead schedules first. So we're going to come back to the work program with the steps, but now we're going to go to the sections, lead schedule sections in the work program. So that's obviously after planning. Here we've got lead schedules and work programs. And then below that, we have the income statement, section 700. And under section 700, we've got cost of sales, 720, and operating expenses, 750. Now, again, if you didn't know where to go, you could simply go and say Control F and look for something. So maybe look for operating expenses, look for cost of sales, or of course, if you know the number. But soon you'll remember or start to learn the numbers and it won't be a problem. All right, so what are we going to look at? We're going to open up the lead schedule. The lead schedule has the number of the sections. So in this case, it's just 750. Let's open that up. I've already opened them for us. Here's operating expenses. So if I scroll up and down on operating expenses, hang on, up, right at the top, I can see my lead schedule number, 750. And as I'm scrolling down to find the employee cost, I have a section called indirect employee costs. And everything in there indicates employee-related expenses. So you've got that bonus provision, company contributions, directors' fees, etc., etc. Okay. When I go to cost of sales, which is the 720, we're going to work on these ones, so you can keep them open if you want to. 720, the lead schedule for cost of sales. In there, we will also find, well, obviously other costs relating to cost of sales. And then I can't really see in this one, where's the stuff around employee? I can see company contribution and stuff, but I must admit, when I first opened this up, I was like really a little bit concerned that maybe the stuff isn't even correctly mapped. So remember that if this is the case, if your mapping number name gets a bit long, you can really just click on the little line that separates the columns and just move it slightly. And then I can easily see direct employee costs. I can obviously move it even more if I wanted to. And there's my manufactured goods direct employee costs. All right, so there's an 11.7 million in cost of sales, and in operating expenses, I have another 6 million. Right, so that's what we're working with today. Good, so let's go and have a look then at our work program. Oh, I'm going to actually close that now for us. Work program 75010. So back in your document manager. So remember that if your settings are such, your lead schedules and your document manager will be in the same window. So just click on another tab for the document manager. Operating expenses 750.10 is your work program. And you'll remember that a lot of the stuff was already done last time, so we won't necessarily see only new things. Opening up that work program there, 750.10 right at the top. Note the risk assessment at financial statement level, the assessed risk as we saw it on the audit plan and strategy before, and then the specific risks that were raised. So the identified risks for operating expenses as a section here refers to a variety of items. But if we only look at employee costs, the third one from the bottom refers to employee costs may not be accurately accounted for. All right? That one, AVA, so accuracy. We do have the question around directors' remuneration in terms of the Companies Act disclosure, so the PD. And then we also have right at the top just an overall consideration, not that one, the one about expenses recorded in the accounting records may not actually have occurred, especially if you think about fictitious employees. Do we actually really have those employees? Did they really work those hours, or are those perhaps all not inaccurate entries, but are they all fake entries and therefore fraudulent or just wrong? So those are the risks. You can see EO is the one that's going to be relevant to us, as well as AVA, the accuracy assertion. Those are the two main ones that we're going to focus on today. Now, also, you can either scroll down, or I'm just going to show you on the right-hand side for the document map. In terms of the work program procedures, we firstly have the required procedures for this class of transactions being not employee costs, operating expenses. So operating expenses as a bunch of procedures, we've performed a number of them in the previous session, and then we'll go through a little bit, and then right at the bottom we've got transactions directly related to operating expenses. So if you haven't noticed this before, you actually have the employee cost procedures after the rest of the operating expenses procedures. So this is the section that we're going to work with today. The TRABS required procedures, that's what we're going to work with today. All right, so we're actually ready to jump into the first step, get going with that, and then to start our field work. So I hope you are ready, because this is where the work is going to start. Right, so procedure 1, it does show the assertion for CEO and ABA, but remember, we don't have a risk for completeness here. For employee costs, there's no risk for employee costs for completeness. So what you could do, if you are allowed to do that, I'll just show you quickly. You could always actually right click on the procedure and enable editing, and then actually remove those completeness assertions. I'm going to just show you how I do that. It's not critical. The standard procedure says, well, in reconciling, you will also prove completeness. So you could do it like that and just untick the completeness one so that it only shows E and ABA. If not, it's fine if it shows C, because you are also proving completeness, even though that wasn't a risk, and therefore you actually didn't need to prove that. But hey, in doing the reconciliation, you are also proving completeness. Okay, so step 1 says reconcile the cost to company according to the client's payroll records to the employee costs in the general records. Now, this is one short little tiny sentence, but you're going to see this is a big, responsible procedure to be done. And in fact, you cannot go and audit the detail in the payroll records until you have agreed those two. So let's go back to our slides, actually, and just have a quick look. Have a look at the process flow. So where are we currently? We are busy. I just actually want to show you, use my pen, laser point. Okay, so we are at the point where we want to now go and audit this client. We have the general ledger, and we're going to look at the general ledger just now. But for us to test the detail of the general ledger, we're going to have to rely on the payroll system, because there we're going to see every employee's monthly salary, monthly deduction for each of the deductions, etc. We're going to see all the detail in the payroll system. But that is a completely independent, separate system from the general ledger. And we therefore need to make sure that these two things equate to being basically the same thing. And if there are differences, surprise, surprise, there will be differences. If there are differences, we need to know what those differences are and go and audit them, so that we know that when we are using the payroll records, we are effectively auditing the general ledger, effectively auditing what is in the trial balance, and effectively auditing what is reflected in the financial statements. Okay, so that's quite critical then for us to know that being able to rely on the detailed payroll records, we have actually tested the payroll system, reconciled it to what's in the general ledger, and therefore ultimately in the financial statements. All right, so let's go back then to the work program. It says reconcile the cost to company per the payroll records to employee costs in the general ledger. All right, so what are we going to do here? I want you to go back. I see I've closed mine now. I want you to go back to your records. There we go. Just want to open the folder. There we go. I see I've done it twice now. So the folder where our supporting documents are. Remember, I said you're going to download the probe audit document, probe audit folder. Then you will have supporting documents, you'll have the caseware file, and you'll have the slides. So in the folder called supporting documents, that's where I want us to go and have a look. So the very last, probably the last document that you have, don't look at the modification dates, because I've been working on them this morning, preparing for today again, making sure I remember what I need to and want to say. So what you will see is the file is called Wrap Up Manufacturing GL Operating Expense. That's the one you want to open up. Open that one and let's see what we can see in there. That is now called the General Ledger. This is not something new. It's the same one we used in the previous session to audit operating expenses. But what you will see is that we've actually split the General Ledger for the employee cost items out of the GL. So there's obviously a massive task in reconciling each of the General Ledger accounts to what's in the trial balance, to what's in Caseware, what's in the lead schedules, etc. That we've done all for you, and we have shown you that this information on this sheet, on this tab, employee cost, that is all the information relating to employee cost. So you can trust us in that regard. Maybe your senior would have done that for you in an audit. In other cases, sometimes you might need to actually go and find them yourself. All right, so what we're going to do now is we're going to actually have a look at the GL, which we've got here, and then also go and prepare a working paper to see how we can reconcile that to what's in the client's payroll record. So this is for GL. What we also want to have a look at is the client's payroll record. So there you will have a document which in our schedule or in our folder is called 12 monthly reports split between salaries and wages. Where did I get this? Well, this one I also got from the client. I asked the client for something like, where can I see the 12-month salary, the salary records or the detailed employee records by 12 monthly totals, or the monthly payroll report, something like that. If you're unsure what to ask for, you can always kind of have a look at what did they use last year, because different clients used it, or use different names for these items. So that would basically be something that they're going to use. Otherwise, maybe ask a senior or someone. But you want to be able to see, let me show you what this is. You want to be able to see all the employees. Well, not all the employees, not the detail. You want to see all the months. In our case, we've got salaries at the top, wages at the bottom, all 12 months, and you want to see the records split according to the different types of items accounted for. Now, I'm going to just use colors here so that we can just keep track of what's happening. You really do not have to do the same. But first off, we have the income. So this is almost when I call it the gross or the basic, the gross salaries for the employees. At the top, we've got salaries. Let's keep those a pink one. And at the bottom, we've got wages. Right, so that's also just giving us an indication. Firstly, the income, the total gross income. Then the next one that we have in this table are the deductions. So deductions are the items that come off the total income, or rather off the gross income, and the employees are paid the net of the income and the deductions. And then lastly, in our report, the client also has the responsibility for contributions by the company itself. For example, just maybe a silly example, but a very easy one, is your unemployment insurance fund, your UIF. The employee, the worker, has to pay over a percentage of their salary to the UIF so that they can claim if they need to. But there's also a company contribution, and that being in this column, company contribution, same one, also 1%. So they are exactly the same value. Sorry, now I've actually messed up my things. Let me just go back to, no, there we go. Just want to give a moment for it to swap. There we go. So this is the company contribution UAF. All right. So if we talk about total cost to company, which is what our work program spoke about, we want to make sure that we know the total cost that the entity incurred in paying salaries. So the total money that basically flowed out of the business is the total gross, okay? Because portion of that went to the employee, and the other portions, like the medical aid and the other employee deductions, went to them. So it's the gross of the employee and the company contribution. So what we're going to do, I'm just going to make mine a little bit smaller so you can see. It's maybe going to not be too great, but might be too small now. I'm going to do it for a second just so that you can see. The yellow ones on the left-hand side, those are the incomes, less the deductions. That's not more money going out of the entity's bank account. That is just part of the yellow ones. And then the company contributions are additional payments. So if I want to calculate the total cost to company, it will be the total income paid to the employees or allocated to the employees and the company contributions. So I'm now going to actually add those two together. So I hope you can follow me. I'm going to just call this total cost to company. And I'm going to literally take the total columns, total company contributions, total income, and just add them together as a simple sum. Okay? I'll do that relatively slowly for you to see. So you can see now it's column AU and column O that I'm just literally adding together. And for the month of May 2022, that's the first month in their financial year, that was 454,000, etc., etc., etc. Okay, so you can then go and say, I don't know if you can see this up. When I hover my mouse over this little right bottom corner, there's like a little, what would you call that? And it looks like a plus sign, but a little indicator that shows you can do something. It's different to any other items, just, yeah. And you can actually drag that formula down as much and as far as you want to. You can drag that formula down to copy that same formula across to all the lines. And then we can actually go and say, right, so what is the sum of the cost to company for salaries? And we can do the same thing. I will go and copy the same formula, just Control C, move the arrow down to May for payroll for wages, Control V to paste it, and then I've got that same formula there, and I can drag it down again. And I do a sum function. You might have seen the little sum function at the top of on my ribbon. I can use that one as well. It will, most of the times, it will go and select all the ones that are basically attached to or touching my current column. So you can see that it didn't actually go and use the empty lines, and definitely not the ones in lines 6 to, what was that, 17, 18. So that's also a nice and easy way to calculate the sum of the wages. Right, so the total cost to company, I can then go and calculate as being 11 million plus the 5.9 million. And that gives me a total of 17,588. Good. So now I've worked in my payroll system. I know that's the total cost to company. We know in the lead schedules, where is my lead schedules? Operating expenses, I've got 6 million. Okay. And we know that in the cost of sales, we have, well, almost 11.8 million. All right, but we're now going to go and do a working paper to show how we actually tie these items together. Right, so let's open up a working paper. So you don't need to do a new working paper. I've included an example for you. So still in your Caseware file, in your document manager, under operating expenses, there is a document called 752 Employee Cost Reconciliation Working Paper. You can open that one up, and then we have a look at an example, a template if you want, of a working paper It's really just to help us to basically have the same layout of our working paper, to hopefully save some time in getting it done. But please, if your firm uses a different template, by all means use their template. Or if you want to make it easier for you as you go about, you might even find ways in which it works better for you, makes more sense for you. So this is then primarily just for us to be able to get it going faster. All right. So the firm's called Fletcher Inc., Wrap Up Manufacturing. We've got our year end. It's a schedule of the employee cost GL to payroll reconciliation, so that anybody that looks at this working paper can immediately see what we are doing. We have the documentation of who's performed it there in column G. Well, so I will be performing it, so I'm going to put JS, which is my initials for the firm. And in terms of the date, remember, the date required is the date on which you complete the working paper. Now, I know we're going to complete it today because you and I are working through this. So I'm going to actually put in the date already. A very nice way for you to do this quick and easily without having to remember what the format is, etc., etc. You can simply use Control, and while you hold in Control, you do the semicolon, and that will simply put today's date. Okay, semicolon is, of course, that one that's like a dot and then a comma at the bottom. Full stop and a comma if you want. Okay. So there's the date in there already. The reviewer will sign off when they've reviewed, and there at the top is the working paper reference in red as we use it for our referencing. Copied across from our work program. I'm actually now going to split my screen so that we can actually just refer to these things more easily. I'm going to use the window left. You might remember that from one of our first sessions. The link where I say window left, and I click left to make that go to the left, and then I'm going to use the work program to actually show on the right hand side. For ease now, I'll close the map just now so we can more easily see the steps. But what are we wanting to check? We want to see where those materiality numbers come from, and we'll go right to the top for risk assessment in the work program. There I can see the specific materiality is 800. Individually significant is not that critical right now, and there right at the top, overall materiality, and then clearly trivial is 30,000. Right, good. So that's just in terms of the materiality figures. Then we also have here line 27 that says what audit work is performed. While we are doing the transactions directly related to operating expenses, the TRAB procedures, we are doing procedure 1. So that's why we've documented there to say transactions directly related to operating expenses, step 1. Good. So the references then to the work program, this is 7510. I can see it again at the top of my freeze, and I've included that as a red item. We are not going to actually sample here. So that's why the items about the population, the sample size, etc. is not applicable. Why? Because we are not sampling some of the information. We want to take the full general ledger relating to employee costs, the full payroll system, and reconcile them together so that we can go and sample from them when we go and do our detailed testing. So that's why there's no reference or no information about the sampling. What we still need is the source here to say where is this coming from. So what are we going to use to do the reconciliation? We're going to use the general ledger and the 12 monthly analysis payroll report. That's what the client calls the report, the 12 monthly analysis payroll report. Remember always the point about documenting how you tested the completeness and the accuracy of the population from which items are selected. That special paragraph 9 of the audit evidence standard. And so what's interesting here is because we are doing the reconciliation, we are actually proving the completeness and accuracy of this schedule. So we don't have to then, well, it's kind of practically impossible to go and test the completeness and accuracy in order for us to test the reconciliation, or in order for us to do the reconciliation. So in that case, that's why we are saying here, the completeness and accuracy of the population will be determined through this test. It's not always possible or practical in a procedure, but in this reconciliation, it definitely is. Later on, you will see we're going to use other documentation provided by the client, and there we will have to test the accuracy and completeness in other means, because that won't be a reconciliation. All right, what's left for us to confirm on this template then is the risk of material misstatement recorded here. And again, we can do that on our work program. I'll go and record the risk at, or rather select the risk at assertion level. Maybe just scroll a little bit for you to see there's no risk for completeness, no risk recorded. We have an occurrence risk. You can even refer to the actual risks recorded, because we only focused on employee cost risks. So there's a risk for occurrence because the expenses may not have occurred, the employee cost included. And we are checking the accuracy because employee cost may not be accurately accounted for. Those are the only two assertions that we are proving through this procedure. And how can I also confirm that? So we can see it's medium there in the risk assessment tab or in the risk table. But I also know that from my required procedures, which only has EO and AVA selected for that procedure. All right. So I think and then remember to include your reference there, 75010. I think I might have put that in preparation for this morning. And then we are pretty much ready to start the reconciliation. All right. This is going to be quite a task, and I see it is already 10 o'clock. So what I'm going to do is I'm going to let us have a quick comfort break. It will be a 10-minute comfort break. And then once we come back, we're going to do this reconciliation. All right. So go make a coffee. I don't know, get up, walk around, do what you need to in this 10 minutes, and then we will continue with our work, with our section afterwards. Enjoy your break. Right, welcome back, everybody. I hope you had a lovely break and a coffee or the whatever you needed. If you hadn't had breakfast, I hope you had it now. Right, so we are continuing the work on our reconciliation. And on the left of my screen, I have the Excel working paper where we're going to do the reconciliation. Currently on the right-hand side, I have the work program, but we're going to very soon move over to something else on that right-hand side. As a reminder again, if you also want to use your screen like that, maybe on the one hand see where I am working or watch the webinar part, and on the other side maybe also do both the working paper and the reference. Remember that you can simply use your Windows button on your keyboard, and then, oh no, I need to also remember, yes, Windows button, and then click to your left arrow if you want to move the page to the first left-hand side, Windows right arrow if you want to do it that. You can even, but off the top of my head, I can't remember exactly, but you can even split it up and down. So you could split them into 4 quarters if you wanted to. And of course, if you could see those small little bits. But maybe you've got a big screen where you are also following along, and that will help fantastically. All right, so on the left-hand side, our example or our template guidance for us to complete this is guiding us or prompting us to start looking at the general ledger. So this is then where I'm actually going to go to my Caseware file, and this is where I'm going to do Windows right-hand side, so that we've got the Excel sheet on the left and our lead schedules on the right-hand side. So employee cost per general ledger, that's the lead schedules. And I'm going to go to cost of sales. So cost of sales, there we have the 11,783,049.76. So I'm literally just going to type that there. And when I go to the, sorry, let me first remember always, we are going to have to put a reference in there. I'll probably even do like a little hyperlink reference or a document reference to say I'm going to refer to, and this is 752. That's the working paper where I'm referring the document to, right? So that's the reference that I want to include. And so that's from the lead schedule to the working paper. From the working paper, I want to refer this to the lead schedule that we have open. And now I can't remember the number. The reference for this lead schedule is 720. So then on the working paper, I'm going to just type 720. Oh, hang on. If yours is referring to it as number, you can either change it there to say text, then it will just show 720. Or you could also just type a little apostrophe 720, and that will also show it as a reference, not as a document. Right, then operating expenses. So we've referenced and cross-referenced the cost of sales lead schedule. Now the operating expenses. Again, that's the amount of 6060386. Where do we get that? Well, we get that from the lead schedule 750. I know that because I remember that, but also if I go right to the top of this lead schedule, I will see the 750. Top right corner, you will see the 750. Okay, scrolling back down, I'll include the reference, right click, new document reference. And of course, that's 750. No, sorry, same working paper. I'm on the lead schedule currently. So I'm also referring it to the reconciliation working paper and select OK. Good. So now I've got the references on the lead schedule and I've got the references on my working paper. Everything's cross-referenced. So that's now the information or the total employee cost according to the general ledger. I'm going to skip the part that says on the left-hand side, less amounts in GL, not in payroll. We're going to do the reconciling items soon. I'm going to go straight to the employee costs per payroll. So let's now open up our employee cost payroll report. That's the one that where we highlighted the yellows and the things before. I'm actually going to also move that to the right-hand side. And we are then going to go and take the total cost as we had it before. We calculated it before the tea break. There we had the total cost according to the payroll. I'm just going to say total cost to company. Oh, goodness. And that is the 588,978.32. I'm doing many things at once. All right. So, surprise, surprise, there is a difference. There is a difference between the total employee cost in the general ledger and the payroll. 254,000, so really not the end of the world, but still, we can't live with that. We need to still go and figure out where is the difference, because otherwise, really, if you do not reconcile this difference, the client's payroll system, whether you are looking at the monthly ones or looking later on at the detailed individual payroll records for each of the employees, none of that is actually going to prove anything in the financials, because you don't know that what you have in the payroll system actually represents what's in the financials. So we need to go and spend time and energy and effort, and it's going to be time and energy and effort, to go and reconcile these two before we know, yes, this is, I always think of it as being a more user-friendly version of what's in the GL. All right, so we want to make sure that this agrees to what's in the GL so that we can use the more user-friendly version to go and test, because it's not very user-friendly to go and test from the GL. All right, so let's go and have a look at some of the items. So now we go to our general ledger, back to the general ledger, the detail, and we go and we see what is included in there. So for example, if we just, again, if I just make that smaller, if we have a look at something like the on line 44 of the general ledger, there you've got a company contributions medical aid account. Okay? So in there you have entries, types of entries, general journals. That's pretty much the type of entry that is used to bring the records from the payroll system into the general ledger. So they process it as a general journal. The reference is there normally a month-ish, more or less the month and a number of the journal. And then the description, you can clearly see, says salaries May 2022 or salaries September 2022, etc. So I would expect then, if I go to the actual detailed payroll records, that when I go to the, now I'm losing my words here, when I go to the payroll and I go to the column reflecting the salaries, because remember the reference is salaries, and I go to the salaries record for company contributions, so those are under the oranges, medical aid company contributions, and the total number that I have there is 314,155. And what is the total entry for the closing balance in the GL? Well, that's 314,155. So you can literally, if you want to, I promise we're not going to do it that way, but you could, if you wanted to, literally go through that one by one by one, go and see how these actually agree. So the same with company contributions, the Provident Fund, let's just do that one just for fun if you want, just to see that it works like that for each of them. So company contributions, Provident Fund, 161,750 in the GL. On the payroll report, we've got the Provident company contribution for the Provident Fund, 161,750. And that way you can really go back and forth to go and highlight which ones are there and which ones aren't. And through that, you can then actually go and identify the reconciling items. All right. So back to the GL itself. If we go again, scrolling up and down, you can see most of them have general journal, general journal, general journal as the description. The references and the, as the type of entry. The references are quite normal. The descriptions are quite normal. And then suddenly, when I get to line 104, immediately there, your eye would have caught that to say, hang on, here's something different. CB is cash book, so there's a payment in the cash book. The reference is WCA, and the description is compensation commissioner salary portion. Okay, so there was a payment made for, and WCA is the workman's compensation. So more or less once a year, every employer greater than a certain number of employees, or that employs more than a certain number of employees, has to pay over to the workman's compensation commissioner a percentage of salaries as a contribution, so that when an employee gets hurt on the job, they can then actually go and claim compensation from the workman's compensation commissioner. Okay, so if we were to go and look on the right-hand side, there is no such thing in the payroll records. I could have also told you that, because the reference is not payroll, it's not general journal, it is cash book, right? So that entry, I'm actually going to move this sheet across to the right-hand side, the general ledger, because that is now one of my reconciling entries. It is in the GL, but it is not in the payroll. So I'm going to say less amounts in the general ledger, not in the payroll. And I'm actually going to have the workman's compensation. Oh man, now I've got to type it correctly as well. Workman's compensation commissioner. And I'm going to make a note here for salaries, because this amount is only for salaries. I'm going to also, in the meantime, make a note, workman's compensation commissioner for wages, because if we pay for the one, we probably pay for the other one, and I want to remind myself to go look for that one, possibly also one of the reconciling items. Good. Now let's think about the whether it's a positive or a negative. It is already in the general ledger. I want to take it out because it is not in the payroll records. So I will use a minus and then the amount 26829.99, so that I can get closer. Did you notice that my my difference actually reduced when I added that in there? So that shows I'm making progress. Okay. Now remember that each of these items actually need a reference. So let's just also document the reference here. I just want to make sure, I can't remember now if I'd already put a reference in there. No, so let's just put something like, let me just quickly check. I think I made a note as to what we wanted to put here. Okay, so we can just simply say I'm just going to say WCA and then say work. WCA is tested in the trade payables section, because today we spoke to our audit senior and she said she's going to test it. So we have agreed it to the general ledger, or we can even, to the GL. So we could use a GL, and then we can also use a WCA to say workman's compensation is tested in the trade payables section. So we're not going to actually audit it here. Okay, please, you only audit it on one of the sides, not in both cases. Let's go back to our legend. We also need to add then the GL for agreed to general ledger records. All right. So there I'd always make sure that I've got my legend updated as I go along. I see there's a question, does the workman's compensation incur in all industries, or is it industry specific? So it's not necessarily in all industries, and you might even find a client works in a specific industry but then doesn't pay towards it, and it's basically categorized according to the size of the employer. I've got a number now in my head of 50 employees, but I might be wrong. But if I remember correctly, it's the moment they have more than 50 employees, then they need to pay workman's compensation. But you'll also be able to see that if they paid workman's compensation the previous year or the next year. And remember, it's actually quite easily for government to know whether they should be paying this, because, well, they know exactly how many employees are employed by the business, because, well, they pay over the PAYE. All right. Oh, I see Tiana says, even if there's one employee or more. Thanks, Tiana. I was under the impression it's only over 50, but thanks. All right. So that is not done on a monthly basis like your UIFs and things like that. So that's perfectly fine. Good. So we've done the first reconciling item, and I almost want to already highlight that and say, good, one down, just so that we don't get confused later on. So up here is a new one. All right. So then if we go and we have a look at the rest of the GL, again, we are back. It almost feels a little bit boring, eh? As we go and we say, yes, 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 general ledger, general journal, nothing funny, and we scroll through and we scroll through and we scroll through. Okay. What we will find, though, is when we get to, I'm going to come back to wages just now. I just want to actually also talk about provision, so I'll come back to wages. But can you see that suddenly with the leave and bonus pay provision on line 293, there the reference is no longer a month. It's also a general journal, but it is a provision. So clearly this is something different also. All right, so let's just think about provisions. You might also remember that before I said this is an accrual, so there's no estimate, but the client does make provision for bonuses in this case, where they are actually, not contributing, accruing a monthly amount towards the, let's call it 13th check type bonuses, because it's a fixed amount that they normally pay at a certain time of the year. For this client. Okay, so again, you've got to figure out what your client has. Some clients will have those performance-based items, but what happens in this case is the client has recorded a monthly provision or accrual for the bonuses, and so that's obviously not what was recorded in the payroll system. Right, so let's go and see. I've got two ways in which we can actually go and reconcile this or go and check if there is a difference to what's in the payroll. Remember the payroll, if I show you the payroll system, there are bonuses paid there. In column E, we have the annual bonuses paid in December, but those amounts are not necessarily what was provided for or accrued. All right, so the first calculation, or the first way in which to calculate that I'm going to show you, is basically by using the expense. All right, so I'm going to say bonus provision. Oh, goodness gracious me. For salary, that's the expense that was accounted for. And that is on the lead schedule. Let me just quickly go here. The operating expenses, bonus provision 220, that lead schedule. Or the GL if you want. Okay. So that was a 220,000 lead schedule, provision. And then I also have the leave, my goodness, and bonus provision for wages on the cost of sales, which is where my wages are. Let me just show this to you properly. Leave and bonus provision 720. Okay, so that's that one. Yeah, it feels like I'm doing the wrong thing, but I'm not. Good. So then the salary one, again, we will reference that back to the operating expenses lead schedule. Sorry, 750. And the cost of sales one, the wages, to the wages lead schedule. And again, you will reference them on the lead schedule back here as well. I'm not going to do that now, but that is how we will do it on that side. And then what we need to see is what was actually paid. So we've got the GL and we know what we paid, what we accounted for, accrued here. So there's the 720 that we've got for that one, and we've got the 220,000 in another spot. But what we actually pay as the bonuses for these people, and so in there, that's where we've got the bonuses according to the, well, let's call it actual bonus. Paid, and that will be the total. Okay, so we will find that then in our payroll system, and you can probably already see there, column E, we've got the bonuses paid. I'm going to deduct that though, because obviously the 2 is a difference. So the actual bonus paid is 281,477 for my word, let me just start this again, sorry, minus 281,447 and then minus the 643,160.50 being the actual bonus paid. Right, so what do we have here? We have an over provision. Can you see we provided more than what we actually paid? That's why we are left with an amount at the end of the day. Over provision. Oh my goodie, my fingers don't want to type today. So we have an over provision of the bonus that's in the GL, not in the payroll report. Right. I will also reference this one. In my case, I'm going to just call it APR. Which stands for the annual payroll report. If it's going to confuse you with APR for April, then call it something else if you want. You're welcome to. And then in my cost or in my legend, I'm just going to, I've already got an APR there. I'm just going to make it capitals as I had before. So that's a very easy, quick way using basically the expenses side to check what the over provision or under provision potentially is. Before we go and record it at the top, let me show you the second way in which you can also calculate this. This one I like to refer to as the balance sheet or the liability option. So in the first one, we looked at what went through the income statement. Now we're going to look at what is in the balance sheet. So we're going to start with the opening balance of the accrual. Okay. And there we have the bonus and we've got the leave accrual. And then we're going to have the closing balance of the accrual. And again, we're going to have bonus and we're going to have leave. So where do I get those? Well, that's easy. I will get them on the lead schedule. Which lead schedule though? Not on the cost of sales or the operating expenses. I'm just going to find the trade and other payables lead schedule. So Control F, just move that across. Trade, if you want, or you can even use payables if you want, because maybe you something like that. Not accounts payable. You see it went to the bottom there where something is not relevant. I will rather want to go somewhere else to the top and look what I found there. It's found section 630. Now you can continue searching to go and search inside, but I mean, this is the section I want to be. I know that. So I'll close my find. And there is the lead schedule for trade and other payables. Right, in clicking that, I want to see the opening balance and the closing balance for the accrued leave pay and accrued bonus provision. So in terms of the opening balances then, we then have, now I must just type over appropriately. So what is the opening balance? The opening balance is the balance that was reported at the end of the previous financial year. So that will be the comparative numbers. Right, so in terms of the accrued bonus pay, there I will have the last year's numbers, 752,446.36. And the leave pay, also last year's number, 194,890. Oh, goodness gracious me. But I will then have that as a total. And of course, the closing balance is the end of this year. So again, the bonus, what is the total of the bonus at the end of this year? That is our current year, 767,808.86. And the leave, 194,890.19. Okay, but now I need to deduct the two off each other. So I will say minus the sum of these two. No, I've already got the minus in there. Sorry, guys. Not the minus, just the normal sum. And it will already deduct the two. And again, I have a minus. Okay, which means that there was an over provision. My expense was too big. And in this case, my provision at the end of the year was actually more than last year. So that is another expense. Right. So what do we do then in terms of getting it back into our reconciliation? We now at least know the amount is correct. I see somewhere I must have mistyped something because it must be 362. Let me just quickly check where I missed my typing. There it had to be 637. Okay, guys, I'm going to actually just type in the correct amount here because I'm not sure now which one I actually did wrong, and I know you'd rather want to see the correct amount and the fact that the two are exactly the same. So there you've got 15362, 15362. Okay, the actual bonuses paid, to show you that, would have been those two. And there you can see I've used the same number, 924,637.50. So a colleague of mine is always very, very, very conscientious. She uses literally uses the functions in Excel to have the numbers appear, and then she goes and includes them in the working paper. So that's obviously also fantastic. Good. So let's go up back to the reconciliation. Here we now know that we have the bonus and leave pay provision over provision. Okay. So what sign are we going to use? A plus or a minus? Well, we know we have more in the GL than what is in the payroll system, so we've got to take it out to get closer to the amount of the payroll system. So from that, I'm going to say minus, and I'm not going to try and retype it again. I'm just going to refer to that cell, and I'm going to have a minus 15,000. And yet we are still closer to the amount that we need. All right, so still far, but it looks exciting. Good. That is then the provision for bonus pay, and we are getting back to that. Good. Before, we had a look at that gross wages account. And I said, let's skip that for a moment because this thing just looks horrendous. I mean, you've got 10 million rands worth of stuff in here that is from line 231, but a lot of them are actually just the gross wages. So it doesn't mean that there's just funny things in there, but we need to split it. So you might be able to do this in another fancy way. I'm going to actually do it in a very slow way for us to see in detail how you could go about this. So I've just added another sheet there. Maybe let's say gross wages. Just call the sheet something else, just so that we can look at it separately. And really, this is almost a little bit archaic, but if your Excel skills aren't too great, or if you want to make sure you know what you are doing, this is a very safe way to do it. So I'm literally going to just select everything, everything in the boat, not in the provisions, in the general, in the way. Oh, sorry. I've got a sneeze coming, but it's not coming. Okay, so I've selected everything in my gross wages account, all the way from the top to the bottom, closing balance. And I'm going to select copy, so Control C, move over to my gross wages sheet and Control V to copy everything. And then I just select them right in the top corner, and I just select any of the column headings, and it automatically splits it across so that it's easier for me to see what's happening. All right. Then I want to apply filters now. So where do I find filters? In my data ribbon is where I find my filters, and I just simply select filters. That selection, that heading, and filter. Okay, so now I've got all the filters. Now, if I then go and I look at the type of entries, you will notice that I've got general journals, which is those normal ones that we used to have for all the other accounts as well. But I also have all kinds of other funnies. So what I'm going to do is I'm going to deselect all of these, and I want to first look at which ones are the general journals. They are likely to be the normal, I'm going to call them monthly journals from the payroll system. Okay, so there I've got the general journals, wages, maybe there's an increase, things like that, and so forth. And I'm going to actually just do a sum here. So sum of all the debits, sum of all the credits, and then see what is the total of these two. And that I find I've got a problem. Oh, you know what? There was another. Let me just quickly see. Okay, we're going to go with this for now. So for now, we then basically have 10,629, and we've got 112,000. I'm going to probably, there's something that I'm missing, but I'm going to find it just now because it's not the number that I was expecting. Also note this funny one, correction of wages. There's a funny 61 cents. Here's also one that says reversal of accrual leave portion, but okay. So let's just quickly, in fact, I'm going to just actually go back and just see all of them. Look, yeah, there's a compensation for commissioners one. You see that one? That's the WCA one that we were looking for earlier. So let's go and record that WCA one that we were looking for earlier. Remember, we made a note here to say workman's compensation wages. So that's then, I'm going to actually highlight it for us in a color. Let's make it blue. That's then the workman's compensation commissioner fee for the wages. All right. So again, what is the sign? It's in the GL at the moment. We want to take it out of the GL so that we can get closer to the amount of the payroll system. So we're going to use a minus here. And again, exactly the number that we have in the records. So again, I've agreed it to the GL and it will be tested in the workman's compensation liability. Sometimes it can be tested on our side, but we're not going to do that today. The senior said she's going to test it on her side, and that is perfectly fine. All right, you can see we've come even closer now to all of those ones in terms of the total that we've got. All right, so now let's go back and we go and filter to find, unselect everything, only select the general journal, and then go and do your totals. So equal sum and then there we are, 10,516. Okay, so that's what we've got for the moment. Let's go and have a look at what we have in the payroll system. For what are we looking for? We are looking for gross wages. So there's our wages. And there's our gross. Oh, goodness, sorry, guys. 10,954 is in the actual payroll report. And there we have 10,516. Okay, so I'm going to actually then type this here, 10,954, 531.87, and see what is the difference between these two. Okay. What do we know? We know that the medical aid, where is the medical aid now, has already been accounted for. So the medical aid is in a separate account. Okay, that's fine. We don't have any medical aid for these clients, for these guys. The company contribution, all of that, that's all fine. So somewhere here we've got 437,000. But what do we also know? We have already considered the bonuses. Okay, so the bonuses we know is not in the gross wages account. We know that the bonuses is in a separate account. If I go back to the employee cost ones, there you've got gross wages, okay, on line 231. And in a separate account, we have the leave and bonus provision. So then, of course, the payroll records with the leave and bonus provision, we can't be using. All right. So if we then say, well, actually, we should be deducting the bonus from this one. And then say, right, so how do we go about all of those ones? How is that in comparison? Oh, man. I'm confusing myself here. Can that be right? Yes. So we are only out by 205,000 Rand. Okay. So we want to see how is that made up of. So if I remove this now, and I say we know that all of these general journal ones, they are fine. Let's go and actually highlight them and make them another color. Remember before I used the wages are the bluish one for the workman's compensation. So I'm going to use a orangey, yellowy one for all of these general journal ones. Okay. If I now select everything, you can now see that there's a number of other ones which we haven't yet taken into account. So let's go and have a look at them. If I just quickly scroll up and down, I can see, well, they're mostly cash payments or cash from petty cash or payments through the bank cash book. There's a gardener. This is casuals. There's a gardener, casuals, paints. There's a correction. Now, what you can also see about the correction is that the reference for both of them is PC262. They are on the same date. My date is a bit far out. Look there, they're both on the 30th of June, and the amount is the same. Okay, so I'm almost not worried about them. I can even highlight them if I'm happy. Casuals, gardener, casuals, late delivery for whatever that is, all kinds of funny little amounts in here. Not too worried about them, smallish amounts. So let's then go and actually filter everything other than the petty cash that we've already, the general journals that we have dealt with, right? Sorry. We want to select all, but unselect general journal. That's what we want to see. Now we've got all the white ones. Okay, so the totals here, let's take those out. So the total that I've got, I'm going to remove the workman's comp one just now. Total debits here, total credits there. Do I have a filter? My filter. I think I've got a problem with my filter settings. Yeah, my filter is not working correctly. Let me just quickly see if I can actually fix it using my big filter. Okay, you know what I'm actually going to do? I'm not going to filter because I don't want to spend our time now sorting these or filtering through these things. I'm going to actually sort them. It's going to look funny now, I know, but I'm actually going to sort them according to the description column. So that's column, oh, sorry, not A, column B. Okay. Now, what we can see now is that we have, sorry about all of these colors now. So you can see now that we have a number of these funnies. There's the petty cash. There's the cash book payments. And then, okay, that's just the closing balance one, so that doesn't make a difference. And then we've got, well, the general journal ones. So if we do a sum function, I'm going to actually just do a sum function of these, just to see what we've got there. I'm going to do a sum function of that one. And then we do a sum function just to summarize. And now note what I'm doing is I'm actually deducting that 350 there to make sure that we don't duplicate it. Then I've got three amounts here. And if I now see what is the total of all of these items, I'm stuck with 83,793. Okay, now let's go back to our reconciliation and see if that tells us anything. Look at this. Where is my 83,793, and then I've got 83,494. That's very close. Okay, so we know now where one of our problems are, but now before we go ahead, where does this go in again? This one goes in this one will go back to the general ledger because it is in the general ledger, but it's not in the payroll records. Okay, so we're not saying these aren't legitimate payments for salaries. We're not saying there's any misstatement. We're just simply saying that these entries did not go through the client's payroll system. And so therefore, we can not say that that will automatically equate to what's in the payroll system. So what we want to include then here is I want to then say, well, cash wages, various, something like that if you want, and I'm going to include, now make sure that you don't just use the total that's outstanding because that's not correct. The total outstanding is 83793.25, which then, sorry, other way around again. I forgot to think about my signal, eh? So I go, it's in the GL. I need to take it out of the GL. So I need to make it a minus. And look how close I am now. Now, normally you could say, well, this is also still close enough, small enough, whatever, we can move along with it. It's not the end of the world. For those of us that are perfectionists that want to really, really get to the bottom of it, I remember when I did my articles, they always said, well, you could have had a 1 million rand going the one way and 1,298,000 going the other way, 298 rand going the other way. So no difference is ever immaterial. I think we've pretty much moved on from that one. But what I can tell you is that if we go to the payroll records, so the payroll system, because I've worked through all of these things, and that's why I kind of know what to expect, I know that under the company contributions, where is my company contributions now? So there's a lot of contributions there, but one of the contributions is I need to go to the right color, right? One of the contributions is the loan FB. Okay, now like one of my colleagues also says, this is not Facebook. Okay, well, I think most of us are more Instagram type people, but still, loan FB is for fringe benefits. So when these employees, in terms of Schedule 4, where they have loans that are interest-free, the interest portion is basically a fringe benefit. And so the total of that fringe benefit is 297. That is nowhere in the general ledger. Okay. So that's not accounted for in the general ledger. So what we can do is we can actually go and record that in our reconciliation. So again, this is now, think about it, it's in the payroll system, not in the GL. So we will go to the employee cost per payroll section, less amounts in the payroll, not in the GL. So there I will go and say loan, fringe, benefit, something like that, amount. And that is then the 297, but again, sign, it's in the payroll system, we want to take it out, so we're going to minus 297.93, and then there's a 61 cents, and you might or might not have seen when we were playing in that wages one, there was a weird 61 cents entry there, and that actually also explains why we've got that there. Okay, so I'm just going to say GL for that one, the payroll records for the 297, and possibly also then audited somewhere else, but you can also say clearly triple amount, something like that. And of course, the total cost to company is from the annual payment records. The bonus over provisions, we will refer to the wages we got from the GL, sorry, not the WCA part, also from the GL. The bonus provision comes from here at the bottom, so you could possibly have a little reference there to just reference those two to each other. Of course, I didn't even reference these amounts from the lead schedule. All of these items need to be referenced in order for us to get to a point where we can say, we are happy, because remember what we wanted to do here? We want to say we are happy that when we go and take the payroll records, payroll report, and go and select from that we are happy it is representing, in maybe a more user-friendly manner, it is representing what is in the general ledger already. And now we know that there are differences between the two, but all of them can be explained, all of them are tested separately. And so therefore, when we go and do our detailed testing, we can go and use the client's payroll system to do our selections from, to go and do our testing on, etc. So it feels like literally, I know it's 11 o'clock, we've spent 2 hours in this webinar today, and all we've done is do the employee reconciliation. But you cannot do anything until you've done the employee reconciliation. And this is often, even in the field work, the part of auditing employee costs that takes up the most time. All right, so please don't feel despondent. That is the reality of it. And we've actually done a heck of a lot by being able to prove now, not even just the completeness and accuracy of the information provided by the client, which is also a big thing, but we've been able to prove now that we can actually just rely on the client's records. All right. So before already I've said I put in the date there by using control semicolon. I put in my name. I checked that the working paper number is there, and we are happy. Okay. So again, right at the bottom of the working paper, make sure your legend is there and complete. Right. And also then make sure that you've got a conclusion. In this case, the conclusion is already completed for us to say, based on the testing performed above, the objective has been met. Fantastic. You can then close, save the working paper, and you have done your first bit of work. All right, I'm going to close it and go back to my work program, because we now need to sign off the step. All right, so where's my work program? Last, I actually had it minimized. I'm just going to make it big again. We are busy with step 1 of the trade procedures. Yours might still be signed off. If not, or if it is signed off, just untick it and tick it again. And you can then say no exceptions. I've signed it off, and it's already got that reference for 7:52 with today's date. Good. Give yourself a pat on the back if you are as excited as I am that this thing actually reconciled. If we've got some more experienced guys here, you will probably know that, yes, this is a time to celebrate. Okay, but there's still lots of work to do. So let's move on. I think what we may need to do is let's take a comfort break. I wanted to give us a 10-minute comfort break, but I rather want us to have a 5-minute comfort break. So I'm not going to put on a message, a video like we had before, because that's a 10-minute video. It's going to confuse you. So my watch says it's 1 minute past 11. Can we please be back in 5 minutes exactly? So that, according to me, is 6 minutes past 11. Okay, I'm going to actually show the tea break slide. No, man. There we go. Tea break slide, coffee break slide, and just a 5-minute comfort break back at 11:06. Right. We've still got lots that I want us to get to. So let's take a quick comfort break and then get going. Right. Enjoy your break. Right, ladies and gentlemen, it's 11:06. I can tell you that if you were like me, trying to make a cup of coffee, the kettle is hardly boiled and it was time to run back. So I understand. Just going to quickly find my place in the slides again, so that when we get going on those, we are ready. We were busy with the work program the last time. Oh, not that work program. And we were working on lead schedules and those things. Got it. So I just wanted, yeah, you can see my screen. I hope the majority of you are back with your, whether you had to do some stretches, some start jumps, I don't know what you might have needed to do. But let's go through and see. Once we've done all of that hard work to do the reconciliation, what is then left to do? Now, a lot of the work's already been done for us. For example, so the procedures now say obtain a salary register or wage summary sheets and ensure that each period is included in the listing. So we've already seen then in our payroll records from earlier that every month is included in our records. We can also get a listing where we look at a month and look at the detail, and that's what we're going to go to later on. Select a sample of the employees and verify their existence. So Helen's already done that for us, where she then went to go and select. We looked at the records and we then selected a specific month. So the record that we then got was also for February. To also just show you that. In your supporting documents, you will see an Excel sheet that is called February 2023. That was obviously their February year or February month in their year. Detailed report. This is only an extract. So in there, we also have all of the employees and all of their detail. But now remember, this is an extract. So we had selected, we're going to get to the selections just now, we had selected those 4 people. And the information for those 4 are then listed. So what Helen has done is she went ahead and selected those 4 employees for us, and she verified their existence. We're going to see that just now on the working paper. I'm going to actually close the document map so that we can see better. Good. So she's done that on working paper 753. We'll go and look at 753 just now. Then the next step we need to do, step B, is to reperform the additions and cross costs of the payroll. Now, she hasn't signed off anything, but she has said that she's performed on the 12 monthly analysis and the employee selected for testing. No, what is the word? No exceptions were found. Okay. So now, what I would like us to just go and have a look at is to actually say, all of these analyses is then done in 753. Open up 753 either from the hyperlink from your work program, or you can, as before, go back to your Caseware file, go to your document manager. We were in 750 earlier under operating expenses, and go and click and select employee detail testing 753. Okay, so you could have also found it from there. But that's what's lovely about these hyperlinks from Caseware to your Excel sheets. So let's see what's in this working paper. Again, right at the top, I've got employee detail testing, client name, our firm name, etc. The materiality figures are pulling through. The source is the payroll reports. We're going to work from the payroll reports, select the employees, etc. On the right-hand side, we have the working paper reference. And Helen's already done most of the work here. She even signed it off in January. Okay, that's fantastic. She's done it a while ago already. Good. Then let's document how we determine the completeness and the accuracy of these payrolls reports. So the completeness and the accuracy of the reports has been tested through the reconciliation, which we just did, of the general ledger to the payroll 12 monthly analysis. And that was done on 752. Now remember, in reality then, she obviously couldn't have done it before already because we first needed to do the reference. Okay, so The objectives that we're testing for employees, you might still remember, is EO, the occurrence, and there's a medium risk for that, and AVA, which has a medium risk, and again, coming from the work program, already referenced for you. The population there is, you can either use the employee, well, rather the lead schedule costs, which are the ones that's included in here from the lead schedules, or possibly even better is if you use the population from the payroll records, which then shows you that's our 12-monthly analysis, where we had the total cost to company of 7,588. Both of them have been reconciled, so I suppose either of them would have been fine. I think I might have preferred the total cost to company one, just because that's the report from which we are actually selecting, but the amounts in the lead schedule are the 784, and we've got the reconciliation between the two. When you are selecting the employees, you will be selecting from the detail included in the employment records, the detail included in the payroll section. So either way, you'll end up selecting the same items. In terms of selection, we selected 4. The sample size and all those things were determined through the firm's methodology. So your firm might have a different methodology. In our case, obviously, to save time, we've already selected for 1 salaried employee, 3 waged employees. And just at this time, to interrupt myself, we've got a session coming up, I think in May, where we're going to talk about the probe selection methodology. So the control testing sheet and the substantive testing sheet. So if you want to hear more about that, just look out for that session as well. But for now, for today, we've selected it's for 1 employee, 1 salaried, 3 waged employees. The work program, 75010, and this is procedure 2. Just to remind you again, there we see procedure 2. Okay. All right. Here we've got then the total cost to company per the 12-monthly analysis for February. So let's make sure that we are working with the correct information. We've done a reconciliation from the annual report. So what do we have in there? Let's make extra sure we've got the right information. Well, for February, remember that's almost towards the end. For February then, the total cost to company is 480. And the what is this now? The wages, the salaries and the wages. I just copy that across for you as well for February, and the sum of those two, just like that, that gives us 1379496. So 1379496.15. That's from the 12 monthly analysis that we've tested. If we then go to that February extract that we were working on earlier, remember that one that I showed you that I said we're going to work on? So there in that extract, if we go right to the bottom there, the February extract, the total income, the 1.2, okay, and the total company contributions, there we've already got the total of those as well reflected for us. Okay, so I've got the 1379496.15, and they agree 100%. So what have I just proven? I've proven that the February list that I've got that you're seeing on my right hand side is a representation of a detailed representation then of the information that we saw in our bigger report for the month of February. Good. So now I can go and work on the February information. Let me just move the screen of mine because the slides at the back are confusing me. Good. So we then went and selected, or Helen then selected 4 employees for us. Now maybe just to also just show you, if I scroll right to the top, on our working paper we're showing Brett George, but on the client's thing it says George Brett. It's just because they are showing the surname first, and we wanted to use the first names. You'll see them Mbasu Patrick. My mind, it makes more sense to say Patrick Mbasu. So on my working paper, I said Patrick Mbasu. Okay. So that's really just if you see a discrepancy there, the employee code's been entered, the rate has been entered. You can see them also there from the client system. We'll talk a little bit about how we calculated the income, but that's all been recorded there for you. and then the total gross salaries recorded for the month of Feb. Okay. The deductions has also been recorded there in detail for us to be able to test those. And then, yeah, at the bottom is the taxes, the tax per the scales and so forth. What we've also included for you is the tax scales for the case study. Now, very important, please. This is a case study, and we've just used tax scales that will fit with our case study. So please, even though it says 28 February 2023, do not go and use this for your client with a Feb 2023 year end. You will either go to the SARS website, or if your firm has tax tables or tax little booklets, some firms even have them in digital format these days, please use those to do your calculations and to refer to them. This is just a table for case study purposes. Okay, and then we're going to do some testing here at the bottom as well, where Helen's already done stuff for us for some of these tests. Okay, well, I go back to the top and I see to the right-hand side where we've done some detailed testing. There's also company contributions and the total cost to company in there for us. Okay, so now we go to the work program and we see what is it that we need to do. I'm going to move the work program there for us. A sample has been selected by Helen. B, reperform the costs and cross costs and additions. So the selection was there, it's been done, but what would you select? Let me just show you. I'm not going to do every single tick for you, but you will basically see that the sum function includes all of the items. The formulas are correct in these tables. Okay, and then once you've checked them, that's where you will include your little tick marks. So for example, that little tick mark in our worksheet says cost, and it's literally a shift in the number 6, which just puts a little thing there for you. And you can do that on each of them that you've checked. And on the right-hand side, again, the standard normal one would be to say a C-C is cross cost. And once you've checked, again, you don't just put them there, please. You check that the formulas are correct. Then you can also pull down all of those references. Okay, so you'll do that to your table of income with your table of company contributions, even your total cost to company, and then your deductions as well. Okay. So once you've done all of that, that is your step B, cost and cross cost. Have you done all of them? Are they fine? We've done them. I know they are right. So you can then go and complete column U for each of these lines. And I will put a note in my function line. I put an A because the font selected is Webdings. You might remember this from previous sections where we said if I just use an A, it automatically puts a pretty tick mark there. Can you still remember what the other tick marks are? If I want to put a cross, I put an R. And if I want to put maybe a question mark, that is an S. Okay. I don't know all the others, but those are the 3 I know. A, tick mark, R, cross, S, question mark. Sometimes I'm still waiting for something and I want to quickly just put a question mark to remind me to go and look for that. Okay, so that I've done now. That was step B, and I've signed it off, and I can even then put in a reference there. And you can literally type it in there, 753, it will include the hyperlink, or you could have gone and looked for the working paper. Okay. Step C, sorry, there's step 1 that Helen did for us. Now let's just quickly look in step 1, how she verified their existence. She went to go and firstly check for each of them if they've got a signed contract. She went to go and inspect a copy of their ID, okay, to see that there is a copy of their ID on file. And then she went to physically verify them. In other words, she walked up to them and said, "Good day, Mr. Brett. Good day, Mr. Mbasu, etc. Are you this person?" or "Hello," or "Is this your name?" Things like that. Maybe rather than saying, "Hello, Mr. Mbasu," then they know they must be Mr. Mbasu if they're not. Asking them for their name, asking them if you can see their ID, things like that, to really physically verify, to know that you've spoken to this person. And then the other interesting one is to actually go and inspect the leave records. Because if this is a fake employee and they're not actually working at the business, anybody can pretend to be Mr. Mbasu, and I can potentially fake a contract and fake an ID of someone else and pretend that's Mr. Mbasu. But what I would probably not do is to go into the payroll leave records and pretend Mr. Mbasu is going on leave. Right? That would be unnecessary effort, but that's another way to catch them out. So to check that this person has taken leave, has applied for leave, has completed the leave application form, it has been approved, those kind of things. To know that this person is not just always at work or supposedly always at work and therefore hasn't taken leave. That could raise some questions. All right. Then, just want to see, I saw a question coming in just now. No, I must have just missed it. Okay, good. So then that was number 2A. 2B we've done. 2.3 is to ensure that the statutory and the industry deductions are paid over timeously. That's 2C. And Helen's also done that for us already. That was the part at the bottom that I said we're going to work backwards, or come back to. She's already checked the deductions on specific amounts at the end of Feb, sorry. Each of those deductions, she checked that they are paid over in the bank statement, the amounts are reflected, and importantly, to check that they are paid over within the required period. So, for example, your PAYE and your URF is due by the 7th of the month at the very latest. If that is a weekday, a weekend, then on the last working day, like maybe the Friday or so before then. Otherwise, trust me, you are going to get penalties. So no one wants those penalties. They want to pay it over on time. And so your medical aid, for example, would have been due on the 1st of March. So you're checking, one, has this provision been paid? The amount deducted at the end of February, has it been paid in the next month? And has it been paid timeously? So she's done that. She hasn't included a reference, so on the work program, I will just include the reference for her. She's already signed it off. Compare the payroll with the list of payments sent to the bank. Okay, that's number D. Now, number D, if I remember correctly, we've got an example. Yeah, so the actual payroll is the list of everybody that needed to get paid. You won't see every single individual's name on the bank statement. This is paid for Mr. Mbasu, that one's for Mr. Brett, that one's for UNA, that one's for Susie, that one's for Johnny. You won't see that. What you see is often one payment being made through the bank to include all of the payroll, all of the salaries and wages, and then the bank actually separates those. So you can see a note here that says the total salaries, I'll show it to you that way, the total net salaries for February 2023 payroll was traced to the bank statement, the total amount, as payments are sent to the bank to make the transfer, which reflects as one total to the bank. We agreed the payment list sent to the bank, to the total paid, and to each employee's net salary selected for testing above. So in other words, our 4 guys that we selected at the top. Right. So that note was made then for step, let's go up, step 2D. Okay, there's column Y. Step D is for the payroll. Step E is agree the amount of transfer with the bank statement. So check the list was right, the amounts were transferred, both of those were done in one item with the note made. 753 as well. Let me just put in the reference there also. Good. Now, some work again for us. Number F. Select employees from the same period, so February 2023, and agree the non-statutory company contributions to supporting documentation. So I see there's like a little bit of a not really an error, but just something I want to fix in column AA. It says 2G. That's actually this F that we're going to do now. So the admin and the other non-statutory items. And we want to check that they are, sorry, the correct amounts. So let's just see again. We've got Chris, Patrick, Philip, and, Brett, Patrick, Philip, and Chris. What are we going to agree these things to? So in terms of the amounts paid, it's an admin levy and a dispute levy and all these things. We go to the client and we say, what are these paid for? Provident Fund, technology contribution, all those things. What are they paid for? Or we might even see from last year's file, or we ask our team, and those are then all amounts paid over for even, I think, some of the, even the employee deductions, also admin, dispute, union fees. So they will tell us then that they are part of a bargaining council. Not everybody belongs to bargaining councils, but you will have some industries. In this case, it's manufacturing, maybe in the security industry, in the security guarding industry, there's a bargaining council. All of these guys have then bargaining councils where they basically, on behalf of all the employees in that are members of now I can't find the word, but eventually then belong to that bargaining council, they then get the same benefits that are bargained on for them or for their behalf. That's the bargain part of the bargaining council. Oh goodness, I'm missing a word now that I want to use to explain, but it will probably come to me. So what they've given us, again, back to our client supporting documentation, they've given us a document that shows the bargaining council contributions. So this is basically like a statement or a report or a you shall that says, for your business, so let me just make this somewhat smaller. So this is from the bargaining council. It's for wrap-up manufacturing with a registration number and all of that information, and shows the schedule of contributions for February 2023. So we could see the total amount payable that was paid over, which we can check to the bank statement, and then we can see specifically for the employees that we've selected. So notice here that if we just go to, well, maybe even here, even on the deductions, you'll see that Brett George doesn't have any deductions for admin, dispute, union, and those things. It's because he doesn't belong to the union. That's the word I was looking for, union. Or then obviously also not to the bargaining council. Also remember, this is the person that's a salaried employee. So sometimes only, sometimes the salaried employees don't necessarily belong to the bargaining council. So there is also records to show who belongs, if you need to confirm that. But even on the schedule, the fact that the person's name is not here gives you that indication. All right, but you can go and agree the deductions for Patrick, Philip, and Chris. They are there, the admin levies, 6.88, 6.88, 6.88. So you can confirm them, and each of those. So let's say, for example, I think the reference that I used here is R. That's recalculated. You can maybe have something else to say you've agreed them to the bargaining council records if you wanted to show the detail, or you can even just have a little tick mark and say, yes, I have agreed them. And oh, sorry, guys, you see what happens here? Let me show you. So I put an A there, but in the line just above that, there was also but a long thing that said admin dispute. So now it's trying to copy the wording from the previous line, but obviously in web things. So it looks really strange. So all I'm doing is I'm just doing one backspace, and then the rest of that, I don't want to call it nonsense, but the rest of the funnies disappear. And then I've got my little tick mark again. So I can just go over past below them. The union fees is the 97. Where's the union fees on the right hand side? Note that Chris, or just Chris, does not pay union fees, so that's correctly empty there. The dispute fees for the employee contribution is there. UIF is not a bargaining council thing, that's the statutory deductions. We'll go and have a look at them just now. All right, so we've then done the employee contribution, employee deduction ones. Then we go to the company contribution ones, and they are exactly the same. You could have agreed them as well. Sorry, just one there, and mark them. Please, I'm doing this quickly now because I've already shown you where to get them from, but you will actually agree them. Okay, so I have already agreed them. There's the 688, there's the 248. Technology 169, where's that? Technology employer only. Okay, technology levy only the employer, that's the 169s that we've got there, and all three of them have them. That's why that's there. All right, good. So that was then 2F. I'll go back to the work program and I'll say, has there been any exceptions? None at all. I will sign them off. What I am noticing today, which is a bit strange, is that there's no initial, but I think it's the way my user was set up that I'm signed in as today. So your name would normally appear, yeah. And then again, this was all documented in 753. All right, making good progress. The difference might be with your actually auditing a client is that your sample size might be bigger. And of course, you won't just get handed a folder with all the relevant information. You might have to go and ask for each of them. Right. Next, agree the pay rate and then non-statutory deductions to employee records or with management. So we've already agreed the non-statutory deductions to employee records, but now we also need to agree the pay rate. So then we go to the client and we say, where's your pay rate? Well, that will be in your increase letters. There you can see column Z on the Excel sheet. Helen's already agreed it to the increase letters, and so we know that those are all accurate. Okay. We would also have seen them, let me just show you here, where we would have had the rate. There's the 100, the 60, etc. The 100,000 is the monthly salary, and the 60 Rand is an hourly rate. It's a wage employee, so they will earn by the hour. Good. So Helen's already done that. Don't know why she hasn't signed off the working paper, but hopefully she'll come and sign off, and we can then just have that the reference. Good. Now, select a sample of employees from the sample period and recalculate any, read all, statutory deductions in accordance with the relevant legislation. Okay. We're going to come back to H just now. I want us to quickly just have a look at the basis of pay to records or clock cards or any of those things. Seeing that we have those numbers here, I'm not going to show you how to calculate each of them, but remember that we've agreed Brett George's salary to his increase letter. He earns a monthly salary, so I mean that's 100,000 finishing clause. Nothing weird as to change for that one. That's I. But then if I just show you number for Patrick Mbasu, there we know his hourly rate, okay, 60.75. But now we need to actually calculate these amounts that he got paid or earned as normal, let's say as income before the deductions got deducted. So how can we know that? We know his hourly rate is 60 hours, but we need to know how many hours did he work. All right, so we go to the client, we say, please can we have records of your shifts of the hours that the guys worked. So the client prepares or gets you a record and gives you the log, February 2023, the hours logged by staff. Now, critical for us here is that when the client gives you these kinds of documents, you don't just say, oh, thank you, this is fantastic, and you run off and you go work with it. Please not. You need to remember that just the way the client gave us that payroll records, the annual payroll reports, and we said, hang on, we need to check if we can actually rely on this. We need to check the accuracy and the completeness of this, exactly the same way. Thankfully, Helen's already done this for us. So she said, note from Helen, the clocking system was tested for accuracy in the assessment of the IT controls. No misstatements were identified. So that tells us we can rely on this report. All right. I have confirmed therefore the accuracy. How do I confirm the completeness? I check that all the wage employees are on there. Now I know most of them are blocked out for today, but you will normally have a full list. Do we have all of our employees on here? Yes, all the wage earners are on here. You can see there's Patrick, Philip, and Chris. Brett's not on them because he doesn't earn wages, so he would not have gone through the clocking system. Or if he had, well, great, but he would have been dealt with separately if he doesn't work all the hours that he is required to. Because if he did work all the hours, that's just the way it is. If he, he's still earning 100,000 Rand flat. He doesn't earn overtime, he doesn't work shift, so that's not going to make a difference to his salary. Okay, so for Patrick Mbasu, how did we calculate? Because you can see these white ones in white have already been tested. So let me show you how that's been done, and then the two lines in yellow you can go and calculate yourself. So for the normal hours for Patrick is 160 hours. And we know his rate is 60 Rand and 75 cents. So if I open up my calculator, just want to give that a moment, I will go and I'll say 160 multiplied by 60.75 and that gives me 9720. That's his normal hours. Right? Then overtime 1 or 1.5, that is where they've worked those number of hours, they get 1.5 times their rate. So they've worked, Patrick specifically has worked 98 hours. So I will say 98 times your rate, 60.75, times 1.5, and that should then give me 8930. Somewhere I have missed something. I forgot the 20.2. You see that? Can you believe it? Let's start again. 98.2 multiplied by his rate, multiplied by 1.5, and that gives me the, still not, somewhere I've missed it again, but it's close enough for us to, see, it looks like it's, okay. However it is, it's close enough, but 9845, I've got 9894849, that's, yeah. Okay, so you can go calculate it until you get it right. It's close enough, 1.5. Then they've got overtime on special times, like let's say a Sunday or so, where they get twice the rate. So there, Patrick has worked 18 hours. So I'll go and have a look at my calculator. 18 hours, goodness gracious me, 18 hours multiplied by my rate of 60.75 multiplied by 2. And that gives me 2187, 2187. Now this client has some other funny thing. They've got a night shift. Night shift in their case, you've inquired, they've told you night shift is where you get 1.15, so 15% more. So again, how many hours did he work? Well, he worked 17.2 hours. This is where I go wrong. I used the wrong little thing, decimal. 17.2 multiplied by my rate, multiplied by 1.15, and that gives you 1.1202, 1201, close enough. That's the rates that I've got there. Okay, so that's where I recalculate. What did we do in this procedure? We recalculated the basis of the pay based on the records, and we have done that. Right. I'm going to come back to the PAYE. I just want to quickly just show you, we have also got the checking the conversion, those things. Sorry, another sneeze there. So we have checked that they've split it correctly between waged employees to cost of sales and the salaries to other operating expenses, because that's how they need to split it. We've checked the total statutory deductions. We're going to check that just now. And then, yeah. EMPs and things we're going to talk about soon. So we've done the majority of the items. There's also leave pay provisions and things. We've done the majority of those matters. What I want us to have a quick look at before we go to some general information is actually to have a look at what the, let me just close this, what the working papers look like, or what a proposed working paper looks like in calculating or trying to calculate the payroll, the statutory deductions. Okay, so those two, that's yellow there at the top, those are ones for you to go and calculate. And then even here at the bottom, I'm going to do Philip's calculation, and then you can go and do just Chris if you've done it. The reason why I don't want to spend too much time on the payroll calculation or the tax deduction calculations are, firstly, because you've either studied this already and therefore can already do it, or you haven't studied taxes yet, and therefore, even if I show you for half an hour, you're not going to know how to do it. So once you've studied personal income taxes, you're going to know how to try and test this calculation. But if you haven't done that yet, you wouldn't know until you've tested that or done the calculation, learned how to do that. So just to show you how that, how we integrate tax with audit, what you've learned on tax side, this is how we're going to actually test it through an audit procedure. So let's use a Brett, for example. In Brett's case, he's got 100,000 Rand a month. We've multiplied it by 12 because when we calculate tax, it's normally easier to calculate it on an annual basis. And then we went to go and calculate his tax according to the scales. We applied the primary rebate. So all of our client staff in our selection are younger than 65 and therefore only have the primary rebate of 15,000. The calculation then automatically does the PAYE is then automatically calculated on a monthly basis. You can see there it's deducted by 12. And then we will go and see what is the payroll for the year that was actually done by the client. Okay, the UIF here, the UIF according to the payroll, I think I might have now closed that down. Let me quickly see if I can find it. Detailed report. Good. So if we just have a look here, the UIF that was deducted for the client, UIF, there we go, is 177.12 cents. It's normally 1% deduction for the employee, 1% contribution by the company. So when the company pays over, it's basically 2% for each employee up to a limit. And in this financial period, the limit was 177.12 cents. So the payroll shows the deduction 177 and the company contribution 177. So we can effectively just say, well, those were done by the payroll. We know that's the limit, so that's fine. And so we've tested that there's no difference. And we can also drag down our little cross costs. Okay, so that was for the statutory contributions. The same also applies there to the UIF for the employees' contribution, these then being the tax deductions. Okay. The skills development levy is basically 1% of the employee's basic salary. What do we have here in the skills development levy? Sorry guys, let me just get this. So this one is, should actually just say view, freeze panes, so that we can move down like that and see who's who in the zoo. So if we want to go and see for Philip and Chris, for Philip, the STL contribution was 217.98, and for Chris it was 188.62. And if we go and actually just calculate this, that's exactly the way it is. So it's 1% of the column I, which is your it was higher up, sorry guys, of the total gross, 1% of the total gross salary. And so that is correctly calculated. I went quickly now, but what did we do? We've basically calculated, well, we copied it from the payroll, then we calculated it as 1%, and there's no difference. So we've proven it. They've done it correctly. Okay. What's left is the payroll, the PAYE, okay, the income tax. So what did we do with Chris? Something similar is what we're going to do for Philip Sitoli. This payroll, remember, was for the month of February. So we need to estimate, the best estimate is by multiplying by 12, the income that he earned by 12 to say, well, that's more or less going to be his annual income tax. And then we go and we look at the tax scales, the tax tables. Now have a look at what happened here. So he earned 261,575. In our case, I'm actually going to increase it slightly because I don't know how many of you are working on bigger screens. So in this case, it's just more than the tax scale that says, well, up to 216,000, you're paying 18%. So on the first 216,000, he would have paid 18%, which is basically equating to 38,000. And then we need to calculate the difference between what he earned and the 216,000, which was the previous cap, and then calculate 26% on that difference. Okay, so stick with me, see if this makes sense for you. I'm going to say, well, the tax, according to the tax tables, is the amount of tax on your first 216,000. That's the first amount of tax. Plus, then we need to calculate the amount of the difference between your income and the scale and actually add back an extra R1. Okay, just if you forget that, that's not the end of the world. And that we're going to multiply by 26%. Okay, that's 50,000 tax less the primary rebate. And if we then divide the difference between those two by 12, we get 2916. What is the tax per the payroll? Now, I think I've closed that thing again. My goodness. Sorry, guys. Come on. Okay, so how much tax was paid over for Chris? His PAYE that was paid over. No, I'm not calculating Chris, I'm calculating Philip. And that was, according to the payroll for the year, 2937.57. There's a slight difference of 20 Rand. Okay, you'll see that none of the others are perfectly exactly the same. The reason is quite simply that because these guys are wage earners, some months they get more, some months they get less. Some months they have more overtime, some that only have normal, some that take leave, so there's obviously no overtime. All those things. And what the payroll system tries to do, it tries to annualize it. That's a function that you set on the tax tables. And when it annualizes it, it constantly tries to imagine that your, almost better say, year-to-date salary is going to be an average going forward, so that you don't have to pay unnecessary amounts of tax in 1 month, and the next month you almost need a rebate from last month's PAYE, because no one's going to give you that rebate or that refund rather from last month's PAYE. So when that gets annualized here and there are a few differences in terms of cents. So that's perfectly fine, and we are happy with that calculation. All right, I'm not going to do the second one. That one you can go and try by yourself using the table to try and calculate that. And that's then pretty much what we've had to do in testing, the detailed testing on this client schedule. I want us to just have a quick look again. I've got a conclusion at the bottom. I've got a legend. I haven't checked now if I've actually done the detailed, what's the word, notes on all of my items here. But I wanted to just double check. Yes, we've done all the testing here. We've highlighted things. So the only yellows that's outstanding is potentially for yourself then. Firstly, to go and check the recalculation of these people's basic income compared to using the clock cards, using the rates. And then if you wanted to go and recalculate just Chris, you could also go and calculate his PAYE. Okay. So it's once you've gone over the reconciliation, it's quite simple, it's quite straightforward. It is a lot of work to do, but that's the way it is. Okay, I see two questions from Masilu. Let me just quickly see there. Is there a limit to the skills development levy like the 177? Masilu, I'm not sure. In the last days when I was still very much focused on those things, there wasn't a limit. I'm not aware of a limit like that. And again, if I think about my own deductions and things, I'm not aware of a limit like that. If there is a limit, it's massive, but I'm not aware of a limit. And then you're asking if I can share the completed working papers for us after this session. What I'm going to do is I'm going to upload it here in the handouts. I'll do that just now. Once we're done, I'll upload this one. So it's basically these two, which I'll upload for you. Just remember that I haven't now done all of the notes and things. So this one, for example, doesn't have all of the notes that I would have normally done. I wanted to rather show you how to do the things than necessarily focus on getting all of the notes. There was still one or two things that I would have ideally in a perfect world would have wanted to include as notes. Yeah, so that's just the thing there, but I'll upload those towards the end, Marcelo. I want us to then also just go back to the slides. Let me just save this so that I don't close it later on and then it's not saved. No, then I'm not going to have anything to upload for you. All right, I want us to quickly, we've got 10 minutes. I want us to just quickly have a look at a few of the more theoretical points. These are also in your slides that you already have, so you can also refer to them later. For employees tax, I think we've discussed most of those ones, so you can have a look at them later on. Just remember that, for example, your PAYE is paid by the 7th of the following month. The accrual, the amount outstanding at year end, is actually a payable in your trade payables, so you'll see those. But if the company does actually pay the PAYE before the end of the year, well, then there won't be any accrual. But because it's normally only paid after year end, you normally have an amount outstanding at year end. All right, where you can go and check these things that they have in fact been paid or what the amounts were is to actually go and have a look at the client's employer EMP 201, the monthly declaration that's submitted, rather than the statement of accounts, because the statement of accounts can also have interest and penalties and all those things, which might be confusing. So here you can really see the declaration there, for example, on the 30th of March. This is a different company's one, okay, so that's why it might look very different. So the declaration, the amount is there. You'll see that there's no skills development levy here. You'll see that column is 0. This client isn't required to pay skills development levy, but you can see the PAYE and the UIF that is included in there. All right. So that could be very helpful, and the client can easily give you those. It's really not difficult for them to get them. The leave pay accrual, we've mentioned the we've mentioned the leave pay and the accrual for those. We've checked the difference and the impact on our expense, but we haven't looked at the amount payable, the liability. So the client would normally calculate this, and remember again, where they have a liability or responsibility to pay that, they can't get out of it, then they have that obligation, either because the contract says you are due a bonus, then you're very lucky, or if they have basically created that expectation, which then becomes an obligation because they've been paying this for years and years and years, and so therefore everybody expects to get a bonus. Leave pay is leave that you are due, if that needs to be paid out if you don't take it. So that's normally your annual leave. Sick leave, maternity leave, there's another leave that I'm also thinking of. So, family responsibility leave, those ones. Normally, if you don't take them, no one's going to pay it to you just because you didn't take it. So they don't accrue for that one. But your normal annual leave, your holiday leave, if you want, is accrued, and it's pretty much calculated per person, per their rate per day, and then you calculate the number of days that they've accrued. And remember, I said earlier, if you get 15 days a year, it's basically 1.25 that accrues every month, and every time you take a day, you deduct those, and at the end of the year, what's not being taken is due to you, in inverted commas, in the sense that you either take it, or if you were to resign or your contract ends or whatever, and you haven't taken those days, then often those are then paid out in cash. But hang on, if you thought this is a great way to make money, it's taxed heavily, so it's really not worth it. A day of leave is worth a lot more in terms of benefit and stress relief and all those things. All right, so there's some information there about how to test the leave pay accrual. It's quite easy. Agree the number of employees, the names of the employees to the rest of your payroll records, the rates we've tested, the leave days you get from the leave records, again, in the payroll system. So really not difficult to test, but important to pay the necessary attention there. In a South African context, I've included some information for you in terms of the CIPC's required disclosure of directors' remuneration for all audits. So whenever an entity, a company then, or CC, is audited, they must disclose the director's remuneration, and it's quite detailed and critical. If it is part of a group of companies, then you have to disclose the holding company, the subsidiaries, any of those monies that are paid. So please don't just think, oh, this person only earned in our company, and yet they are maybe also providing services in a holding company or another subsidiary or anything like that. And so the money that they got from that company doesn't count. We've included a little bullet there for you to say guidance is available for the many options, because I promise you there's a lot of options. SAICA has a guide. I seem to think it's like about a 20 or 12 or something page guide with examples and pictures and things to help you to understand how this works. So if you're in that position where you need to check the director's remuneration is correctly disclosed, there is guidance in our work program, but also please go and consult the guidance available to you on ASICA's website. Okay. Right, if you have fallen asleep or almost run away, this is the time to quickly just work for a little prize. So fingers on the pulse, go and find your question/chat panel. I'm just going to give a second to get there. And then I want to ask a question, and the first person to give me the correct answer with, well, there's two answers. So the first person to give me the two correct answers, that person will then win a little prize. If I remember correctly, but please don't shoot me if I'm wrong, but if I remember correctly, it's a Takealot voucher. Okay, so just make sure you are in the questions space. I'm going to just check later on if I'm missing any questions, but I think I would have gotten all the questions. But Masili, maybe please just also help me to get all the questions if I have missed anything, but I think you've posted most of them. So happiness, everybody ready for that one? Okay, I'm going to share the question with you, and then you put in the answer. The first person that gives me the correct answer will win the prize. Okay. So the question is, name 2 ways in which you can verify the existence of an employee. In our case study, Helen has done that. There was 3 options, well, 3 columns. I've got lots of lovely examples. Okay, I've got lovely. All right. So in terms of the responses that came in, let me just check. Some people only gave 1 option. I am going to give this to Suraj Hira. You said ID and contract, so that's fantastic. Congratulations. There are many correct answers. So thank you for everybody's responses. It's really fantastic. I mean, 2 minutes before 12 o'clock, you guys are still so involved. And I'm especially proud of the ones that said leave records, speaking to employees. So not just giving a textbook answer. So fantastic. Thank you for all of those. I really appreciate it. Right, so I said I'm going to give it to Suraj Hira. So that's fabulous. Thank you, Suraj, and thank you for everybody's contributions. All right, moving on, I am still going to give an opportunity for questions. So please, if you have any questions, there will be an opportunity for those. Just have a look also in the chat function. Masili put a point there for us to say, please help us improve our training experience by completing our survey. There's a forms office form that you can complete, please. And then also just in the slides, I had said more sessions to come. So in the slides that I've given you, but in today's slides, I have had a chance to update that because we have finalized the next dates. So for Pro specifically, you can see our next session is on the 24th. Sorry, the next session is the 15th, not the 15th of April. That's an error, guys. Sorry, it is the 18th of April. Okay, the 18th of April. And then thereafter, that's a Friday. You know, we always do the Fridays. Eh? So it's a Friday, the 18th of April, the 19th probably. And then the 24th of May is the substantive sampling sheet and the control testing sampling sheet. And then we will end off on the 7th of June with one on the conclusion on the working paper. So we've worked on the working paper, or sorry,